Hey everyone, welcome back to this month's edition of the Monthly Market Update. I'm Jessica Bruce with the Bruce & Kelly team, RE/MAX Lake of the Ozarks, and I know everyone is a little bit interested in interest rates, right? As they are rising, you know, a lot of buyers are wanting to see what they can do to combat those and keep up with that rate. So we have Nick and Tami Sutterer with MHQ coming on to help us chat a little bit about that. We're also going to talk about new construction. So in addition to low inventory, new construction's a hot topic. And let's check out Diamond Crest. We looked at it a few years back, and so much progress has been made. There have been a bunch of homes that have been constructed, been sold, and many still underway. So all that and more on this month's edition. Let's get to it. All right, so welcome back to the Monthly Market Update, guys.
Awesome.
Yeah.
Thanks for having us. We greatly appreciate it.
Of course. So what have y'all been up to since I last saw you? It was before Christmas, right around Christmas.
Working.
Getting
loans closed quickly, fast.
You gotta keep Nick out of trouble.
Yes, got to keep him out of trouble.
That's right.
So yeah, just
Get ready for boating season,
Oh.
which we've been out a couple times.
Well, I know everyone wants to know. I want to know always. What are you seeing? What's the current interest rate for first homes, for second homes, investment? What are you guys seeing?
That's a question that, glad you brought it up. I mean, we could talk hours on that, but
Good.
there's so many different, there's 8 credit score, criterias. There's not one rate for everybody.
That's what I try to tell people. It does depend on credit score.
Yeah, and they've got a few new programs that actually, like in the Camden County area, if you make $74,000 or less, you're going to get the best rate out there. There's no pricing hits. Mm-hmm. Now, if you make more than that, and you're buying a second home, and you have a score of 720, it's almost it's like 4.125% points to get the same rate as somebody that is lower income and doesn't have the price hits.
So there's another good question too, because I'll have a lot of clients call in, not a lot, but you'll get them here, and they'll be quoted online. They're like, well, I got on mine, and it's like a rocket mortgage or something. Yeah.
Such and such, right?
And they said it's going to be like 3%, and I always tell them, I'm like, it's probably not a possible scenario.
Well, is it a first home, second home, investment property? How much money are you going to put down?
Yeah.
What's your credit score? I mean, those are all the variables that go with it.
So how do those work? I'm sure you viewers might want to know that. Is it just kind of like a hook and bait for them, and they're just quoting you at that to...
I would say so, yes.
It's advertisement. I mean, unfortunately,
it is.
advertisements to get the phone to ring. It's not to tell you, what your actual rate is, because they don't know. There's so many different variables.
Yeah.
But it gets the phone to ring when you see the teaser rate. Again, if you're buying a second home, it's going to be 1% to 1.5% higher on the rate than a primary home. If your score's a 720, now they've just added 3 more categories. It used to be 740 was the top score for Fannie Mae, Freddie Mac conforming. Now it's 780. So you go to, there's a 760 mark, there's a 780 mark. And what does that mean? Well, if you got a 740 score, it's going to cost you more than somebody with a 780 score.
Oh, to get a lower rate?
Yeah.
Okay.
So if you want the same rate as somebody with the 780 score, it's equivalent of a 0.625% fee, which means it's $625 on $100,000 to get the same rate. So most people will raise the rates instead of paying the fees. That's what they do.
Oh, so most people are not paying the fee to lower the rate.
Right, which in this market with rates coming down, it's probably not the best idea to pay a whole bunch of money for your rate, because you're going to refinance this thing in 18 months. One strategy for our purchase clients during these higher rates, we're doing a lot of these loans in the bigger cities, is they call a 2-1 buy down.
Oh, yeah.
And basically what that is, the seller is doing a concession, and it covers your buyer's, lowers the rate 2% the first year.
2%?
Yeah, and then the second year is 1%. The whole idea of that is to have a payment that we hope we're going to get to in the next 18 months by refinancing. You know, if the rates do drop 2%, you'll have that same payment.
Do you think they will drop 2%?
I do, you know, back past history, economic cycles, yes, there's going to be a pretty big drop. You know, it may never ever get back into the threes, but you know, forecast before November 2024, we should be upper fours.
Wow.
Yeah.
Do you think it'll create what it did last time? So last time when they dropped that low, created a buying frenzy.
Oh yes, that's why right now is a great time. You know, and yes, your payment's higher right now, but that's what that buy down helps you. It gives that payment substantially lower. You can buy now when there's less demand, because once these rates do drop, there's customers that, I mean, you're just not qualifying for that higher home right now.
Okay.
You know, I was showing yesterday a customer that the difference, a 2% difference in the rate is equivalent to about $85,000 more home he can afford. So, you know, if he buys a house today, you know, once we do get down, it's like having paid $85,000 less. But again, that buy down is a great option to help with the higher payments right now.
Okay, and you can do it whether it's a second home, first
Just
home?
primary and second.
Just primary and second.
They won't
so
allow
anything.
investment.
Okay.
Because it's a seller concession. And it comes up to about equivalent of about 2.5%.
Okay. So I did have a question the other day from a client of mine. They had purchased a home. It's their first home, primary home. So they got a really good interest rate, like 3.25%, give or take. And so it's now time for their PMI, their mortgage insurance, to fall off. How would they get that done? Interest rates now are significantly higher. Because are you refining it to get it pulled off, or how do you? You
do not have to refi, okay? There's terms in your loan to explain it to you, but long story short.
Amortization schedule in your loan.
If you write the lender and say you want the PMI removed, they're gonna write it you back and say, okay, it costs X amount of dollars. They order an appraisal. If the appraisal shows there's 78% loan to value, it's not 20, it's actually, there's a formula.
Oh.
If you got
so
22,
it's not 20, you have to have 22.
Yes, there's a formula for them to remove it. But anyway, that's how you can do it without refinancing. And so if it comes back and the appraised value shows that you don't need mortgage insurance at today's value, they will remove the mortgage insurance.
So that was another question. So primary home, obviously there are lots of programs out there. You can purchase primary home for really 0% down, especially in our area. We're rural, correct?
Rural development, USDA.
Okay. And then, what, 3%, 5%, 10% programs for primary, would you say? Yeah. Second homes, what's the minimum you would have to have down if you're buying just a second home? 10%, so you need at least 10.
Yeah.
Now, what about new construction? So we've had a lot of lots and such sell over the last couple of years, people doing new construction. I imagine we'll see more new construction here at the lake. I do get a lot of questions from buyers. They don't understand maybe how that works, how financing on a new construction home works.
I mean, it's based upon prime rate, which is very high right now.
I would use the equity in your primary home and get a home equity line of credit and use that money as your down payment for the lot purchase.
Okay.
That's because you just can't go to the bank and say I want a construction loan for 100%. You got to have some money into it. Either it's the lot, or you got to put 20-30% down. So where do you get that money from? And then during the construction loan, it's some are interest only for that period. And then once the house is done, you convert that to a permanent fixed 30-year mortgage or what have you.
Well, it's spring season too, so we're seeing a lot of homes come on the market. I think every week right now, we're roughly 60 to 70 homes are coming on the market, new listings. However, just about the same number are going contingent and pending, if not more. So, I mean.
But you look at that, but you look at those numbers
ordered.
A year and a half ago, it was 200 coming in. I mean, so it's not as much, it's not keeping up with the demand.
Yeah.
And just think when rates drop,
that
60, 70 that are coming up on a contract, it's going to be more. We're going to be right back to the same.
Yeah.
It's amazing that we have that much demand and that little supply. Right
It is. Supply is so limited, just so limited.
And there's no, especially in this area, there's no end in sight. There's no big subdivisions going up. There's no, I mean, in theory, there's none.
Well, that's why I asked about new construction. You know, there's no end in sight, you know, so
It's just no
buyers
land.
do, yeah,
It's,
buyers
like,
do
tough.
want, you know, they want to build. So, you know, it's nice to know that there's an option for them out
There's
there.
options. It just building right now costs, the inflation, it's after they look at it and the
Building
cost,
costs.
it's like, wow, they go back to looking.
Yeah.
But no, everything should be, I mean, the economy inflation is slowing down,
Okay.
which means rates are coming down, which means, real estate is going to be on fire again. You know, and then for people's payments,
Yeah.
you got to ride that interest rate down.
It's been a crazy 2 years. I don't know if I can do it again. I'm getting old, guys.
Yeah.
Getting old.
It's exciting though. You said it was,
Yeah.
the winter was a little slow,
Yep.
and we're like,
But people
make
are
sure the phone lines were working.
I'll call you anytime. Yeah.
people are ready to buy.
Yeah. Well, thank you guys again so much. I think we could talk about it. I could talk about it all day.
Absolutely.
And I know probably the viewers as well, you know, you guys might have more questions out there too. So can they stop by? Can they call you guys
Absolutely.
anytime?
Give us a call. Our office number is 573-302-9990, or you can reach us at www.mhqmortgage.com.
Great.
We are located right at the Grand Glaze Bridge area here in Osage Beach, so you're more than welcome to come by anytime. We prefer that you give us a call ahead of time so that we can make sure that we're there and ready to.
Don't call ahead of time. Surprise attack. Hey.
But yeah.
And we're going to have Nick and Tami with us really throughout the year. So for you viewers, if you have any questions on, what you'd like to know or more about the mortgage industry, just give myself or them a call and let us know, and we can feature that on here as well. So, all right. Well, thank you guys. Yeah, thank you guys as always so much. We're going to take a little sneak peek now at Diamond Crest. We featured it. Gosh, it's probably been a couple years ago now here. And since we talked a little on new construction, let's go take a little look out there and see what's been happening at Diamond Crest Estates. So since the beginning of 2021, when the builders started this subdivision, 6 homes have been completed. So that's 6 homes that have been sold with buyers happily living in them. Now currently, there are 3 homes still under construction. While those are under contract, we do have 3 waterfront homes left. So there still is time to get in and be a part of Diamond Crest, which is located on the 44-mile marker here at Lake of the Ozarks. And the builders on this have really done a fabulous job. We have Bill Barnard and Kenny McFarland from Kansas City that have done great work and really brought something great here to the Lake of the Ozarks. As we head into lot 18, this one is finished up, new construction, and ready for you to purchase. It is listed at $899,000, featuring 4 bedrooms, 4 bathrooms, and 3,200 square feet. There's also a large unfinished area for storage located on the 2nd level, as well as a cart path all the way from the top of the home down to the water, where you'll find that the home is sitting on 97 feet of lakefront on the water. A few of the fun custom features in here that the builders have put in: granite countertops. You can find those in the kitchen, in the bathrooms. The master bathroom is stunning. Walk-in tile shower. As you head downstairs, they've done really tall ceilings, so the expansiveness and the openness of the lower level is amazing. There is a wet bar, and the views, oh my gosh, the views on this property are one of the best, in my opinion, here at Diamond Crest. You still do have time to pick out a few things. You can do the landscaping, you could do rock, or a really nice sod finish. You can find it on the MLS. The address is 160 Pearl Lane, Climax Springs. Again, one of our few that we have left at Diamond Crest that's ready for you to come in and purchase. So if you'd like any more information on Diamond Crest, or if you want to come see the updates in person and check out these beautiful homes, give us a call and we'll go out and tour them with you. Thank you guys so much for tuning in to this month's edition of the Monthly Market Update. We couldn't do it without you, all the viewers out there. And a big thank you to Nick and Tami Sutterer with MHQ, fastest closings in town, great lenders. And that wraps us up again for this month's edition. If you're looking to buy or sell a home, give us a call at the Bruce and Kelly team here at RE/MAX Lake of the Ozarks. We'd love to meet you, get to know you, and help you find your dream home. Start living that lake life. Till next time.